Welcome again, my friends. We're here to talk today about a subject that I get a lot of questions about lately, which is the subject of where to open bank accounts for crypto today. So, this is a growing challenge, and it was already a big challenge, but it's getting arguably worse. So, in order to kind of discuss this subject, I want to frame it around understanding why it is that banks have a problem with crypto, what you can maybe do about it, and different things around that, because it's just not a straightforward problem anymore. So first of all, let's recognize that there's, I would say loosely speaking, three ways that you could interpret that subject of banking for crypto, okay? The most extreme is, hey, I have a crypto business. For example, I cannot count the number of people, I can count them, but it's a larger number than one might expect, of people who have created crypto exchanges or tried to create a crypto exchange are coming to me saying, hey, where do I bank? And that's not easy, right? It's just not easy. So very common, somebody says, I think I mentioned it in another video, hey, I opened a cryptocurrency friendly company in Estonia. For a while, everybody was coming, right? Oh yeah, great, Malta's accepting crypto. They have the first regime for it. It's like, yeah, but you can't bank in Malta. You can't bank in Malta pretty much at all, let alone doing it for crypto. So you're screwed. It doesn't matter. And there's this weird disconnect right now in the market, especially in Europe, but in general, between regulators and banks. Banks, super risk averse. Banking in Europe is just going to shit. It's garbage. Or it's just extremely difficult to do. They're just very scared. And regulators are like, oh, we're promoting entrepreneurship. We want to make it easier. It's like, well, then you can't open a bank account. How is that easier? I don't know. Although to be fair, the EMI thing has certainly given a lot more options. Whether they're good options is another question. We'll talk about that in a minute. So that's the most extreme case, right? Is you're going to start a cryptocurrency exchange, some business that your business is directly related to crypto, okay? And it's worth identifying. Well, we'll talk in a minute about what it is about that is a problem, and some things maybe to potentially put banks a little bit more at ease, things to say, things to not say, etc. Okay? So the second, kind of the opposite extreme, which I would say is the easiest, is, hey, I want to send money to crypto exchanges. I want to buy crypto from my bank account, okay? This is, of the three different components I'm going to look at, the easiest, okay? And we'll talk in a minute about what that is. But if you're saying all you want to do is just buy crypto, that's a little bit different. So this comes to the next one, which is, what about receiving money from a crypto exchange, right? So many places you receive money from a crypto exchange, they may block the transfer and they may shut your account down. That's the nature of it, okay? So let's talk a little bit about why that is, and why the former of sending money there is a little bit better, right? Banks are principally concerned today about tax avoidance, money laundering, terrorist financing / proceeds of crime, okay? These three things, and part of this is, HSBC got fined $9 billion, a bunch of other banks have been fined big amounts, and so kind of governments have come and said, hey, you're helping to facilitate this, and as a result, we're going to come down hard on you. And unfortunately, I would say that it's been really short-sighted and kind of stupid on the part of governments and regulators not to really clearly delineate, hey, your customers did this and you helped do this. So for example, HSBC was fined, I think it was $9 billion for helping launder money in Mexico. And literally they had done things like design this little hole to make it easy. It was the right size to push the shoebox of money through so they could take this cash, right? There's a big difference between doing that and knowingly facilitate money laundering and saying, hey, look, your clients are doing this, so your bank's at risk, we're gonna shut it down, right? And they're like, hey, well, we've been doing our proper KYC checks, we've been doing our AML checks, we can only do so much. So I think they've pushed the responsibility and the consequences too hard on banks, more than they should, and they've created a lot of fear. And it's very debilitating for the banking sector and for the business sector, right? So I'll probably talk about this in some future videos because I think it's really a disastrous policy decision. and there needs to be some serious changes made because Europe's going to destroy themselves. Europe's basically destroying themselves, and a bunch of other places are basically being wiped out by this as well. So anyway, going back to crypto, so what's the fear, right? For example, I was talking to some clients the other day, and they were discussing with me brokerage accounts. It was their first time having a brokerage account. So they said, hey, our account's going to get shut down from some AML checks. How does this work? And I'm like, no. Brokerage accounts are super easy for banks to deal with because you have your money, which they've already checked. You transfer it into a brokerage account. The brokerage is pretty confident it's all good because it's a first party transfer, right? From you to you. It's still your account. So, and they figure, hey, it was already checked at the bank. So now you trade it, and it trades internally, right? You buy and you sell. Every record is super obvious what's happening there. You pull the money out, and you can only take it out back to that same, to yourself, not necessarily to that same account, but generally to that same account. This is very easy to see. The concern is when they have to answer the question, where did this money come from? And what was it used for? Was this proceeds of crime, right? Was this money that was somehow shifted around under the system? Was this used for, was some criminal sending this money? Are they sending it to you in order to do something illegal, etc.? Okay? And so if I am receiving money from a crypto exchange, the problem is they don't know where that money came from. So there's been some cases where, and especially if you're dealing with wealth management accounts in larger amounts, so you're a more valuable client, they're much more willing to deal with you and kind of take a look and understand what was going on. So if, for example, you put 100 grand onto an exchange, you bought a whole bunch of crypto, it went up over the course of a few years, you hit 2017 really well, you sold out, now you're pulling the money out. And you can show, let's say it's just Bitcoin, right? You have an indelible ledger showing exactly the transactions, and you can say, hey, I got it, it went up, and I pulled it out. That's a pretty clear transaction, okay? And in general, what you're gonna find is that a bunch of banks, when I talk to them, will say, hey, look, we're more comfortable if money has come from, say, Coinbase. Coinbase is better regulated, right? So if you've got Coinbase, Gemini, Kraken, these are generally better known. If you're pulling money from some other lesser known or shady crypto exchange, well, that's going to be probably more of a problem for you, right? So in general, they're very afraid because that money that's in your wallet that you're pulling off the exchange wasn't necessarily yours. It could have been transferred to you by somebody on the dark web, right? It's super common. What is crypto being used for from a transactional standpoint a lot? Crime, right? The Silk Road was the thing that made Bitcoin arguably popular, pushed the prices way up, etc. So that's something that they're afraid of, and kind of legitimately so. And you might say, okay, well, it would be nice for them to understand this. Yeah, but how valuable are you as a customer, right? You're paying them $20 a month and you're complaining about it. You want zero transaction fees, you want really tight Forex fees, etc. Well then, exchange rates, what are we talking about here? You're just not that valuable to be worth a human putting their time into being oh, hey, how's it going? I have a client who's working on some software to be able to help to show banks this, and that could be super cool. And then the flip side, of course, is there's just some recent things happen where the German government has allowed German banks to now sell and hold crypto. So that'll be quite interesting. Because in theory, it could mean that you could buy through them, you could hold it in custody, they would know, just like a brokerage account, that it was all internally validated, right? There was no exchange, no transfers that came from outside parties, and they'd pull it out and it would be very clear, right? So kind of hopefully that happens for the sake of users in particular Europe, right? On the flip side, if you are sending money in, again, the little bit of risk is, all right, well, what are you doing with this money? Maybe what you're doing is you're trying to send a transfer to someone to get around sanctions, to buy something illegal, etc. And we're basically helping to facilitate that, right? And we don't want to be responsible for it. We don't want to deal with criminals. We don't want to deal with terrorists. We don't want to deal with sex trafficking or any of this stuff. Forget it. We don't want to do it, All right, so that's the potential risk for them. And so, if you can avoid those scenarios, well, you're going to be a little bit safer, right? So what are some alternatives then? Well, you could buy some money from somebody through Bitcoin Local, right? That's kind of the go-to way of doing it. And obviously the person who's doing that, it's kind of like, okay, well, how did they get the crypto? They're probably in a position where, they're going to go and buy it off an exchange or something like this. So it's, we'll see. Anyway, so let's say that you are in that situation though. Where do you bank? Okay, so first of all, for the most part, Europe is off limits. Europe has made it super hard in general. I'm railing against Europe because I think Europe is being disastrous to themselves. But in general, Europe is off limits for crypto. And that goes for the European Union as well as, non-European Union countries generally. There are some cases where, okay, if you're a big player, you can get something like, obviously Coinbase was banking at Barclays. Actually, they're no longer there, so Barclays got rid of them, which is crazy because Coinbase is, one of the better regulated exchanges, the best oversight. They have extensive KYC and AML and things like this. And so if they ended that relationship, what does that say for the little guy, right? The little guy who thinks he's going to start an exchange with no license, etc., is pretty much screwed in this particular case, right? So, and let's go back to that in a minute, but this also though would include, like, you're not going to go bank in Montenegro, you're probably not going to bank in Macedonia, you're not going to bank in like Georgia. We used to be able to bank in Georgia, right? It used to be pretty good. Georgia has gone to the shit. It's super difficult to deal with now for transactional banking. So no longer can I recommend that, unfortunately. It was quite good, but the problem is when there's places that are really easy, then the people who flood there are a bunch of them, the people you don't want to have coming there, and pretty soon it gets closed down. So that's generally a sign. Like if you see, hey, it's super easy to do something here, it's like, that's probably not going to last. And sometimes it's not a problem if it's not going to last. For example, if it's an asset that's rising, you can sell out. But when it comes to a bank, you're like, well, my money is there, right? So be careful. UAE, off limits. You're not going to bank with crypto in UAE. You can, to some extent, in Canada and the US. There are some reasonable options in Canada and the US. They're not too harsh on it. Singapore, you can potentially do it. It's getting tougher. Increasingly, the banks, in particular if they're dealing with a crypto business, they don't want to deal with it. So where does this leave you with? Well, it leaves you with usually some quote-unquote high-risk banks. This would be usually, I would say, two categories. There's a few offshore banks that you can go and deal with. I just talked to one the other day that if you put it down $20,000 deposit, then you can deal with them. So, okay, you have $20,000 on deposit, great. That's your minimum, you're gonna keep it there, and then they're okay with crypto. All right, fair enough. Second of all, there's these EMIs. Some of these EMIs, not a lot of them I would say, but some of them will accept crypto and will accept it for, types of companies. But it's shocking how many business, like banks that are, even their criteria is much looser, and yet in spite of that, they still are not willing to take crypto businesses. So generally speaking, I would say if you can, go to Southeast Asia, right? Hong Kong, Singapore. Of course, it's getting harder to just get accounts in Hong Kong and Singapore. But if you can there, some of these islands have banks, like for example, to list one off is Deltec Bank in Bahamas, but you need like $1 million minimum. So if you are looking for, like you can do some private wealth management stuff, then the private banks in Singapore, or sorry, not Singapore, in Switzerland will do it. But again, you need kind of like $2-3 million minimum in order to be okay with them. So that's something to think about. And then these EMIs. So if you want help, reach out to us. We're happy to talk to you about it. We can connect you with the appropriate ones that are useful in your situation and help you get set up. And like I said, it's not easy, but it is doable. So we will see you guys on the next video.